Order! Order! You are an incorrigible delinquent at times. Behave yourself, man!
Well, now, the banking giant HSBC has warned that if Britain votes to leave the EU, it would consider moving 1,000 investment banking jobs to Paris. Earlier, the bank's board voted unanimously to keep its headquarters in London after George Osborne made a series of concessions on bank taxes and regulation. The Treasury called it a vote of confidence in the government's economic plan. But did the Chancellor change his policy to keep HSBC from moving? Here's our business correspondent, Helia Ebrahimi.
For 10 months, HSBC has been wrestling with the thought of moving its HQ out of London to somewhere that would be more sympathetic to the needs of a modern bank. But today, to the relief of the government, it decided to stay put, saying the fog of banking regulation was clearing.
The truth is, HSBC was never going to leave Britain. Why would it? In many ways, the government has already capitulated on issues like taxation, or even the general tone of the debate on banker bashing. This on-again, off-again dance that was finally put to bed on Valentine's Day has actually been rumbling on for years and has created the backdrop against which regulation in the UK has been set.
For the government, HSBC has been a big deal, not just because of the size of the workforce, but also because of the message it would send if such a large global company upped sticks and left the UK. Globally, HSBC has more than $61 billion of sales. Around a quarter of that comes from the UK. Out of a workforce of 260,000 people, 45,000 jobs are based right here.
Banks are really back in the driving seat when it comes to, banking regulation. We're being told that the banks are safe, that we need to not kill the goose that lays the golden egg, we need to give them what they want or they'll leave. Where have we heard all of this before, and where did it leave us last time?
So what's changed since HSBC first launched its review? Firstly, there's the tax. The Chancellor scrapped the old system where banks were charged a levy against their balance sheets.
It is good, very good, to be back.
The new rules mean HSBC's tax bill has fallen from £1 billion to just £300 million. Then there's the end to banker bashing. When the bank's chairman said today that the fog was lifting, he was referring to a whole change in the political tone, which has even shifted the style of regulators like the FCA. Finally, the risk to moving to Hong Kong has gone up. HSBC was headquartered in Hong Kong for 100 years before it bought Midland Bank in 1992. But the lustre of a move back to its roots must have faded as the Chinese economy faltered and disputes in Hong Kong between activists and Chinese authorities escalated.
Many may wag their fingers and complain. This must be HSBC lobbying or strong-arming the government. But it's worth noting that it's not just banks that have benefited from this increasingly benign environment.
When the Conservatives formed their coalition in 2010, headline corporation tax was 28%. By the end of this parliament, it will be just 18%, a very competitive global rate. And while deals between business and government are commonplace, the hope is that companies don't always get things too much their way, especially as in the case of HSBC's turf tantrum when it all gets played out in public.
I've been